Harsh, and viewers, the GDP data is out. The Q4 of FY25 GDP growth is at 7.4% and the GVA growth is at 6.8%. For more, I'm joined by my colleague Pallavi Nahata in the studios today. Pallavi, take it over.
Right now, quite a bit of a pleasant surprise there with GDP growth figures for Q4 coming in at the higher end of estimates at 7.4%. And also the fact that the Ministry of Statistics has retained the FY25 forecast at 6.5%. That is for the full fiscal year. Let's also quickly go over to Kaushik Das, Chief Economist at Deutsche Bank, for his first take on these figures. Kaushik, thank you so much for taking time out to speak to us. A positive surprise on the headline in terms of GDP growth. GVA growth, of course, at 6.8%, showing a wide divergence with the GDP growth because of net indirect taxes, presumably. Please give us a little bit more of insights into that.
Yeah, Pallavi, the first thing is that GDP has surprised to the upside, coming at 7.4%. We were expecting GDP growth to surprise more to the upside compared to the GVA growth. As you mentioned, what happened in January-March quarter is that subsidy payments were, kind of very low compared to January-March of 24. So there was a year-on-year contraction of about 45%. And the way GDP is calculated from GVA, when you adjust for the lower subsidies, the net indirect tax collection goes up quite a lot. And therefore, even if GVA growth came at 6.8, you had GDP growth coming even higher at 7.4%. Now, you should remember that real GVA growth, we were expecting it to be around 6.5%. Consensus was even lower at 6.4. That itself has come close to 7%. It has come at 6.8. So that definitely is a positive surprise for the momentum of GVA and GDP. GDP, we can understand it's a bit statistical because of net indirect tax collection being higher. But even if you look at GVA, it has gone up to 6.8, which is higher than what we had expected. Also, the fact that October-December number, if you see, has been revised higher. So what I can see on my screen is that GDP number has gone up to 6.4% for October-December from 6.2, and GVA has gone up to 6.5%. So from 6.5% or 6.4% in the previous quarter, we have gone up to 6.8, which is, I think, better than anybody would have expected. We have to see more details about each of the components, how they have done. But first take is it's definitely a positive surprise compared to what market was expecting. But we expected GDP to be higher than GVA. If you remember, CSO had implicitly assumed 7.6% GDP growth for January-March. So it has come in line with CSO's estimate. So this comes definitely as a positive surprise.
All right, Garima Kapoor, welcoming you to the show as well. Thank you so much for taking time out to speak to us. I'll quickly go to some of the industry-wise estimates for Q4. For agriculture, we're looking at a print of 5.4%. For the secondary sector, manufacturing specifically, we're looking at 4.8%. For construction, we're looking at a double-digit growth of 10.8%. Trade, hotels, transport is at about 6%, while the financial sector is at 7.8%, while public administration is at 8.7%. So here again, in terms of specific industry-wise breakups, on most counts, this is very much in line with estimates, maybe a tad above what was being expected. Manufacturing, of course, not painting a particularly encouraging picture, but broadly in line with expectations given what we'd seen in terms of IIP growth for that quarter?
Yes, Pallavi, largely the internals look very much online as they were expected, except for the fact that the construction sector has shown a very sharp growth. But remember, construction sector was expected to do better because there was a lagged impact on a pickup that was anticipated on government spending. So mining and mining related activities and government construction related activities really started to pick up pace only after November and December once government spending started to pick up. So a large part of the effect that we're seeing in Q4 is owing to that particular effect. Plus, I think the trade number to my mind should have been tad higher because the trade hotels transport in this quarter should have captured the Kumbh Mela effect. In our assessment, the Kumbh Mela alone should have contributed 15 to 20 basis point to the Q4's numbers. But largely, if you look at the internals, particularly agriculture, which was led by a robust Rabi crop, as well as relatively better print and horticulture, I think internals look fairly in line when it comes to the internals of GVA print.